your view as to why it's important for lots of people to get vaccines? Because if it is a parent's choice, and that parent chooses to get their kid vaccinated against something, it's not necessarily that kid is actually protected if other kids aren't protected.
Exactly right. So if you step on a rusty nail and you go to the doctor and you say, I don't want a tetanus vaccine, and you get tetanus, no one's going to catch tetanus from you. It's not a contagious disease. Measles is, influenza is, and others are. So a choice not to get a vaccine is a choice not only for yourself, but for those with whom you come in contact. And remember, there are about 9 million people in this country who can't be vaccinated because they're getting chemotherapy for their cancer or immune suppressive therapy for their autoimmune diseases. They depend on those around them to protect them. Do we have any responsibility for our neighbors? It is hard to watch. If you look what happened with SARS-CoV-2, those counties that were generally under-vaccinated had much higher rates of hospitalization and death than those counties that were highly vaccinated. And that affects the people. If you're better off, actually, being unvaccinated, living in a highly vaccinated community than being vaccinated, living in a highly unvaccinated community.
That's wild to hear. What about the power of states and local municipalities over this? For example, I have a kid in the New York City Public School District, and he has to get a certain number of vaccines in order to actually be able to go to school. That's a way for them to say, okay, well, we are making this choice, or for the parent to make this choice, to vaccinate their kids against these things. Isn't there power there at the local level?
Yeah, well, mandates are state-run. I mean, there's not federal mandates. I mean, the school vaccine mandates are done by states, and different states actually have different vaccines that they mandate. But we've had school mandates on the books for decades. There was about, by 1964-5, about 25 states had school mandates. By the mid-'70s, it went up to 40. By 1981, all 50 states had school vaccine mandates. And with that, with the enforcement of school vaccine mandates, we went from 47,000 cases of measles a year, 75,000 cases of measles a year, and 150 deaths from measles a year, to eliminating that disease from this country by the year 2000. But it's come back in part because a critical percentage of parents are choosing not to vaccinate their children.
Yeah, numbers tell a story. Hey, listen, speaking of choice, revaccination, we do have choices. What to eat, we have choices. McDonald's is clearly a favorite of President-elect Donald Trump. During the campaign, he even helped serve customers at one restaurant. I got to say, I'm a fan of their fries. Full disclosure, we've seen Donald Trump and RFK Jr. and Elon and others chowing down on McDonald's together.
Well, to be fair, RFK's holding the burger. He's not chowing yet.
Okay, so maybe he's just holding. Maybe there's a little osmosis going on there. Just got about 30 seconds here. I do think about the role of Donald Trump, what impact he might have in terms of his thinking about health and medical care and all that good stuff. I mean, we saw what he did during his first term with COVID and getting a vaccine. So how do you think his impact might be on what goes on in this area? And again, just got about 30 seconds.
No, I think he's hard to predict, Donald Trump, but I think that scene, though, with him sitting there and Elon Musk and RFK Jr. and Mike Johnson and others eating McDonald's, I think my take home from the message from that scene was Donald Trump telling Robert Kennedy Jr., "You'll eat what I tell you to eat."
To be fair, I believe Donald Trump Jr. retweeted that and said, "The Make America Healthy Again starts tomorrow." So
I gotta say, I love a Happy Meal as well. Dr. Paul Offit, this was a treat, a pleasure. Thank you so much for finding time for us. Dr. Paul Offit, Director of the Vaccine Education Center, the Children's Hospital of Philadelphia. Straight ahead, everybody.
That's a great picture.
Yes, it is. Hey, listen, coming up, everyone. Self-driving cars kicking into high gear in the United States? Question mark, maybe. That when we come back.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow is lower, down 110 points right now, while the S&P and NASDAQ are both advancing. Stocks are rebounding after last week's slide as Treasuries stabilized after 10-year yields approached 4.5%. Traders are keeping a close eye on news around President-elect Donald Trump's administration. So here's where we stand. The Dow is down 108, down by about 0.3%. The S&P up 16, up by 0.3%. NASDAQ up 81, a gain of 0.4%. 10-year at 4.41%. The 2-year 4.28%. Gold up $45 the ounce to $26.08, a gain of 1.8%. And West Texas Intermediate crude surging today by 3.2%, $69.15 a barrel on WTI. Bitcoin up 1.2%, 90,216 on Bitcoin. Well, this week we will be hearing from a couple of prominent retailers, Walmart and Target. Retailers will report earnings and provide outlooks for the holiday shopping season, which will be critical for investors given consumer spending powers 2/3 of the U.S. economy. Right now, we've got Target up 2%, Walmart shares down 0.2%. And in New York, the Metropolitan Transportation Authority has approved a revised congestion pricing plan for Manhattan that President-elect Donald Trump has threatened to terminate once he takes office. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get to a story that's getting a lot of play on this Monday. And as a result, this story or possible development has shares of Tesla rallying. They were up about 8% at their intraday high today, now up about 3%. This is all happening as members of President-elect Donald Trump's transition team have told advisors that they plan to make a federal framework for self-driving vehicles one of the Transportation Department's priorities. This is according to people familiar with the matter.
Okay, obviously good news for a company like Tesla. Not so good for a company like Lyft or Uber. Shares of those companies are lower as a result of this. But with what you need to know, Bloomberg News Detroit Bureau Chief David Welch joins us now from our Detroit Bureau. So David, what do we know about this framework? What power does the federal government have when it comes to stuff like this? Because you go to San Francisco, these things are already everywhere.
They are, and you go to Texas, they're driving around under Waymo's brand in Austin. You've got some in Dallas as well with Cruise. You've got some in Phoenix. So cars are out there, but they're in, first off, for the most part, they either have steering wheels, gas pedals, or braking pedals, all of that stuff, and often have a human being as a safety driver in there. What we're talking about is a federal framework governing AVs in pretty much every way, but specifically looking at vehicles that don't have those human controls. That's a truly driverless vehicle. That's what Elon Musk wants to put on the road in a couple of years with Tesla, and that's what has basically changed the valuation on the stock. Investors were worried that the EV business was kind of settling in at a decently profitable, slow growth sort of thing, and he energized interest in the stock again with this robotaxi business. So when you don't have a federal framework for that, you're relying on different states, this patchwork quilt of regulations. It is actually very tough to run them in California. They get monitored strictly, almost impossible in New York, but states like Arizona and Texas are pretty permissive. There's nothing at the federal level. What they do is they try to kind of shoehorn AVs into existing rules that were written before autonomous vehicles were around. And there have been several efforts in Congress and in the Senate to pass rules, and they've always tripped up over something or other. What the Transportation Department could do is they could streamline permitting and they could expand the use of EVs from what they have now, which basically says if you get an exemption for a vehicle that doesn't have a steering wheel and brake pedal, for example, you can run 2,500 of those a year. That's it. General Motors tried to get this exemption. 2 years they waited around. They finally dropped the project. And only one other company that I know of, Nuro, a startup that has that delivers goods, not people, in their robotaxis or in their autonomous vehicles, got an exemption. So it's tough to get and very limited.
Hey, listen, one thing I want to ask you, I mean, I get it that having a patchwork is probably not great on something like that. So I kind of get the understanding of the need for a federal framework. Having said that, don't we still have a lot of safety issues to figure this one out?
There are, and that's why I think the fact that the Transportation Department under Trump wants to do this is good news for autonomous vehicle companies, because you'll get the start of a framework. you know, at that level, and maybe instead of 2,500 vehicles, they could expand that and they could streamline that process. But to really scale this up and to make this a regular thing, you're probably still going to need a law passed by Congress. You're going to need the Senate and the House to both weigh in and approve this, and that's what's always been tough. You have safety groups, you have trial lawyers groups, you have unions who come in and weigh in, and politicians get cold feet because these constituents aren't crazy about autonomy. And look, you do have safety concerns here with, you know, if you just get too permissive, this is the Wild West, and you've got robo-taxis and autonomous trucks all over the place. You know, so people are going to be concerned about that, and we'll still have a debate on this whole issue.
Hey, David, how's all this playing out in Detroit? I mean, you're in Motor City right now. This is a state that was considered a toss-up swing state, battleground state, call it whatever you want. It went for Trump this time. If you're one of the folks who works at one of these American auto manufacturers, and you see Elon Musk by the side of Donald Trump day in and day out, what are you thinking right now?
I think the biggest worry they would have wouldn't be for robotaxi, by the way. I think the bigger fear is that with fuel economy rules and with incentives for electric vehicles, that, you know, Elon Musk is sitting next to Donald Trump down in Mar-a-Lago. If he's okay with getting rid of the $7,500 consumer tax credit to buy EVs because his company makes pretty good money on them and sells a lot of them without tax credits, and he thinks it'll be worse on General Motors, worse on Ford, Toyota, et cetera, then that's likely to happen because Trump doesn't want to keep funding these tax credits. That is tough run on these companies that are trying to build up a supply base, trying to build up a customer base, and trying to drive down costs because they're kind of at the early part of their EV business. That's worrisome to them. And then, you know, what happens with fuel economy rules? You know, are they written in a way or changed in a way that's better for Tesla than it is for the other companies?
Yeah, so that's what I wanted to get at is, like, what about Elon's influence? It's not like you have, you know, Mary Barra having the ear of the incoming president day in and day out, or another auto executive. I mean, Elon Musk is on the plane. He's going to UFC fights. He's down at Mar-a-Lago. He's there the whole time.
That's right. He's spending an awful lot of time there, so he's going to have he's going to be weighing in on the agenda for the auto industry pretty heavily. There are signs, though, that they're already disagreeing over cabinet picks. So, you know, a lot of people have been wondering how long these two very powerful men can work together. We'll see.
But are folks in Detroit, the major executives at the major U.S. auto manufacturers, like, wait a minute, unfair advantage?
They're in a tough spot because they didn't always get their way with Trump, or with Biden for that matter, when they were lobbying the old-fashioned way. And now they've got this new gigantic wrinkle where one of their prime competitors is basically probably the most influential personality in President-elect Trump's inner circle.
So I think about this story you're reporting. It's certainly getting a lot of attention today, but I do think it's interesting that you point out that ultimately self-driving cars will require a broader act of Congress. So the Department of Transportation can say, we think you should do this, but it really is going to be up to members of Congress, right?
Not exactly.
Oh.
The Transportation Department does have leeway to do a rulemaking. And, you know, for example, this exemption right now where you can only run 2,500 vehicles that don't have a steering wheel or brake pedal. If they expanded that, and they've been pushed to do this in the past, to say 80,000 or 100,000, that's a pretty big fleet of robo-taxis. You don't need that many of them in any given city in order to run a business, make pretty good money, and also, if the cars aren't very good, create havoc on those streets. So, you know, if they were to just expand that, that's quite a bit of power. Congress could supersede that, or they could head it off, or they could change it by writing their own rules. So you're going to, you know, both parties are going to be proposing things, and you're going to see, I think, a lot of debate over this. But this does open the door to federal rules where we currently don't have them.
We're talking about it, that's for sure. Thank you so much. David Welch, Bloomberg News Detroit Bureau Chief, joining us there in Detroit.
You know what I like about the idea of driverless cars?
What?
They're not emotional.
But you could be eating in the back.
No.
You're always hungry.
This is serious.
No, okay. That what?
The drivers are unemotional. I feel like a lot of times you see drivers, at least on the streets of New York City, make emotional decisions.
Yeah.
There's a lot of red lights run. These are not safe places to be walking or pedestrians. If we can make them safer, and that involves removing a human being, Sounds good.
I always feel that on a long drive. I get tired, like your attention span. All right, coming up next, earnings season. We're not done.
This is Bloomberg Business Week with Carol Messer and Tim Stennebeck on Bloomberg Radio and Television.
All right, saving the best for last, perhaps. We're going to talk earnings in just a moment. But first up, we got a question for you.
What would you like to hear about on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. All you got to do is visit youtube.com/Bloomberg Podcast and click the link in our profile or our community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg Podcast.
We know you want more earnings. And we've got more earnings this week, including...
Oh, you can scan that QR code too.
Oh,
you see it on your screen right
good
there.
stuff.
Yeah.
You know, the world, that's what we are. We're like...
A big QR code.
Whittle down to QR codes. We're all a QR code. Hey, the world's second largest market cap company, though on some days it could be the largest market cap company, the company most identified with the AI race, we mean NVIDIA, of course. It gives its quarterly update later on this week, along with a few others, as the U.S. earnings season is just about getting ready to wrap up.
We got with us a Bloomberg News earnings reporter, Red Brown. He joins us here in the studio. We got to just start with the big one, Red. NVIDIA. This is the week. It's the week we've all been waiting for. That said, we've heard from the companies that are NVIDIA's biggest customers already. Mm-hmm. So do we know what's coming?
Well, I mean, I think it's a great place to start, actually, as if, you know, a lot of the talk throughout the tech earnings a few weeks ago was what's capital expenditures going to look like. And then when we think about NVIDIA, a big conversation to be what does their outlook look like? And a lot of it is already kind of known. If you think, you know, they continue to see record-setting pace from capital expenditures for places like Microsoft, for Qualcomm, all these other companies that are involved in the AI race. And a lot of that money money ends up going on
They were spending,
NVIDIA's.
right? Still spending.
Billions and billions and billions of dollars.
How many, though, are waiting for that Blackwell chip, which has hit some snags lately?
Well, that's also what we'll get a little bit of insight into when we think about NVIDIA's outlook, and things seem to be getting rosier and rosier by the day. A lot of those supply issues and worries about whether they were going to be able to ramp up or not have seemed to kind of be relieved, and that kind of just clears the runway for NVIDIA to just keep, blowing everyone out of the water this quarter.
You use the SPLC function on the Bloomberg terminal. I see that Microsoft is about 19% of NVIDIA's revenue. Meta Platforms over 10%. But its third biggest customer is Super Microcomputer. That is a company that has been under insane pressure over the last few months. The auditor quit, EY, a few weeks ago, read. Right. Is that something that investors are concerned about?
It's not something that we've come across too much in between like analyst notes and just the people that I've been speaking with. So I don't think that will necessarily come up. And you have to think too, it's like NVIDIA has all this pricing power. They have all this demand. I think they could probably lose a customer or two and not have any issues really.
Having said that, have analysts been lowering their expectations about NVIDIA going into the release so that expectations are a little bit lower, or no?
No, I don't think that's the sense that I get either. I think optimism is kind of a little bit higher. I think if we think about last quarter, there was a little bit more of a shakiness going into the report.
Yeah.
Afterwards, shares fell by around 6%. The expectations this time around, as we get closer and closer, is that they're going to outperform the top line expectations, and they should do so by more than they did the prior 2 quarters this year. And that's already kind of more than double the rate that the rest of the S&P 500 has been beating expectations. So, just really strong kind of going in, strong expectations.
I think I'm looking at the number right. 83% in revenue growth year over year.
100% in data center alone. That'll be the 6th time they've at least doubled the revenue for that line.
Revenue growth is slowing if you look at the last few quarters. I know it's coming off of crazy levels, but I'm just saying, if you look at the second quarter, it was 122%. Go back to the first quarter, it was 262%. So I get it. Like, people have bought a lot. They're putting things in place and kind of waiting.
I think it's a completely fair point, and that's a lot of why there is so much attention on this Blackwell chip, is like, how much are they going to be able to continue this pace, right? So,
Tim's waiting to buy his Blackwell chips.
Yeah, right.
They're going to be on everyone's Christmas list.
Yeah, I wouldn't even know what to do with one.
Does it fit in a stocking? I
don't think so.
Hey, speaking of stuff that fits in a stocking or maybe under a tree, let's talk about retail, because we're going to hear from retailers this week. I want to start with Walmart. We'll hear from Walmart tomorrow. What's the outlook going into the most important or current quarter, the most important quarter of the year?
Yeah, I think people, again, are kind of turning the tide, turning the expectations around for Walmart as well, and retail in general has done really well this quarter. I think it's kind of flown under the radar.
Yeah.
Both discretionary and staples have been among the top performing sectors for the S&P 500, and then Walmart is going to kind of be the marquee earnings within that group. Same store sales expected to grow by 3.8%. That's on top of a 4.7% last quarter. So just steady progress for Walmart. They've been kind of navigated all these issues really well. Should see kind of steady progress there.
Check this out. The S&P Retailing Super Composite Index up 25% this year. The S&P is up 23%. Walmart's up almost 60%. You're right. Like, this has been some major outperformance.
Yeah, and I think it just, obviously we had so much news over the past month.
Yeah.
That the earnings just kind of got swept away, and that, it's fair enough. But I think this will be a moment for Walmart to be able to kind of put a flag in the ground.
I didn't know if you know this, but Tim is a Maxinista. What are we going to get from TJX? Yeah,
I don't think I've ever been to a Max.
What?
Yeah, I'm sorry.
Goods?
You're going to have to take
Home
me.
goods?
Yeah, sorry,
all right,
Carol.
20
I know
seconds.
you love Max.
I kind of do. I love to bargain hunt for, that's just who I am. 20 seconds? What do we need? Like,
how about Deere? Deere is expected to report on Friday.
Yes.
Okay.
Apparently, you are not a Maxinista.
I'm not a Maxinista, but I do pay attention to Deere. Expected to see its biggest sales contraction since, I think, 1991, or since the Great Recession, and the second worst since 1991. So, just to put a little damper on the mood.
Road trip. You, me, Tim. We're going to Home Goods.
Can't
Sounds
wait.
good.
TJX.
We'll be there.
Fred Brown, earnings reporter at Bloomberg News, on all things earnings, including NVIDIA this week. For those of you watching on TV, the close is coming your way. Tim and I continuing on Business Week.
Yeah, Trump's anti-regulation pitch is what the AI industry wants to hear. All that and more on Bloomberg Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Peter King. Driving in Manhattan has never been cheap. Now it's about to get even more expensive.
Motion carries. We've adopted the resolution.
New York's Metropolitan Transit Authority has voted to adopt a $9 toll for driving in Manhattan, discourage people from doing that. It's the first U.S. city to adopt congestion pricing. It goes into effect January 5th. AAA says some 80 million Americans will travel 50 or more miles for next week's Thanksgiving celebrations. Here's the Auto Club's Aixa Diaz.
What this tells us is that holiday travel is still very important to people, but Thanksgiving is the most popular of all. When we look at all of the holidays across the year, Thanksgiving is the busiest.
About 6 million of those travelers will fly. The timing is bad for one low-cost carrier that's just filed bankruptcy. Spirit Airlines says except for that, all operations are normal. KNX Radio's John Baird is in Los Angeles.
Some travelers didn't know about the bankruptcy filing. It came as a bit of a shock.
I think I would have preferred to have heard it when I landed.
Other Spirit customers shrugged off the airline's financial problems. They were more concerned about the unexpected fees they sometimes encounter.
Like carry-on, it was like $79.
And several passengers said they hope everything works out for the airline because they think flying Spirit is a good deal. John Baird for CBS News, Los Angeles International Airport.
For the first time, Israeli Prime Minister Benjamin Netanyahu says an earlier attack on Iran has damaged its nuclear program. CBS's Linda Gradstein.
Speaking in the Israeli parliament, Netanyahu said that Israel's retaliatory attack on Iran last month hit an element of its nuclear program. It's not a secret, Netanyahu said. There is a specific component in their nuclear program that was hit in this attack. Press reports said he was referring to an active nuclear weapons facility in Parchin. Netanyahu also said that Iran still has a path to a nuclear weapon and Israel must continue to act against Iran. Linda Gradstein for CBS News, Jerusalem.
President Biden takes an extraordinary step of allowing Ukraine to use American-made weapons to go deeper into Russia. CBS News national security contributor Sam Vinograd.
What really led to President Biden's change of heart is the presence of North Korean soldiers, about 10,000 or so, that have deployed to Russia and are deploying as part of Russia's war effort against Ukraine. That it was the presence of those North Korean troops that was the deciding factor for President Biden.
Mr. Biden has also asked Congress for nearly $1 billion, $100 billion in emergency hurricane aid. The Dow is down 68. This is CBS News.
Or CVS.
McDonald's says it's spending $100 million to try to bring back customers after this fall's E. coli outbreak. Some of that money goes to the hardest hit franchise owners. Want to breathe more easily? Stay away from this place for now.
In New Delhi, schools have been closed, construction projects have been stopped, and non-essential trucks are banned. Visibility is so low, airlines have been dealing with delays. In some places, pollution levels are 50 times higher than the recommended safe limit from the World Health Organization. Forecasts say the poor air quality will continue all week. Air pollution in northern India rises late in the year as cold air traps smoke from emissions and crop burning. Steve Kathan, CBS News.
An 18-year-old has celebrated his last birthday in the U.S. That's because he's also a Buddhist Lama and headed to join a monastery in the Himalayan foothills. I'm Peter King, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody. We are just 60 minutes away from the close on this Monday, November 18th. I'm Carol Masser, along with Tim Stenivek, live here on Bloomberg Business Week. Markets bouncing around here, kind of a mixed trade, but the S&P and the NASDAQ, they're definitely up today.
Yeah, we're going to get some more details from Charlie Pellet in just a minute. First of all, welcome back, Carol. It's good to have you back.
It's great to be back. I kind of missed you guys. I kept reading in, most read, and all that good stuff, but I like being in it.
Hey, we're going to be in it in San Francisco a little later this week. You'll be hearing us from a little later. You won't be hearing us from our first hour because we'll be traveling later this week. But there's a couple folks filling in who I think are going to do a good job.
I don't
know.
No
pressure.
That Matt Miller, man.
No pressure. Is it Matt Miller? Maybe not. I take it back.
You better
then.
get it right, buddy. Just going to say.
Hey, we got a great program coming up over the next couple of hours. Small caps, they've underperformed the S&P 500 for years. Is 2025 finally their time to shine?
I don't know. We've been talking about it for a long time. We shall see. Also, Donald Trump's anti-regulation pitches, what the AI industry wants to hear. So we're going to get into that. All things AI, especially in an interesting week when we get another read on AI thanks to NVIDIA earnings.
Okay, from AI to venture capital, we're joined by the only Arab woman in the Middle East running a VC fund. She's got offices all over the region. There's a lot of money in the Middle East.
I feel like a lot of money pouring into it as they try to kind of really work on their economy, spread it out, and go into different areas. All right, lots to come over the next 2 hours. First up, though, let's get a check on that trade and your top business stories. Here's Charlie.
Thank you very much indeed. We just got just about 54 minutes to go until the closing bell clangs on this back-to-work Monday. The Dow Jones Industrial Average lower now by 71 points, down by about 0.2%. S&P up 24. That is a gain of 0.4%, while NASDAQ is up 117, up 0.6%. The Russell 2000 index of small cap shares, little change now, up by about 0.2%. And yes, a whole lot more on small caps coming up here on Bloomberg Business Week. 10-year at 4.40%, with the 2-year right now 4.27%. Spot gold up $47 the ounce to $26.10. That is a gain of 1.9%. West Texas Intermediate crude up 3.3%, $69.24 for a barrel of WTI. Bitcoin up 1.8%. 90,774 now on Bitcoin. Well, the S&P 500 index coming off of that 2.1% weekly decline, and Lori Calvasina, head of U.S. equities at RBC Capital Markets, says we could see a further decline of as much as 10%.
I think what makes me a little bit nervous at this particular moment is I do see this case for a pullback in the short term, and when you're putting all these targets together, you have to pick a starting point. So, I'm going to defend the strategy community a little bit here. Pay attention to their math. Pay a little bit less attention to those absolute numbers, because we do have to adjust models continuously based on new information that comes in. That is a reasonable thing to do, and based again on these starting points and where we end up on December 31st.
Lori Calvasine of RBC Capital Markets. Sources tell Bloomberg members of President-elect Donald Trump's transition team have told advisors they plan to make a federal framework for self-driving vehicles, one of the Transportation Department's priorities. Tesla shares, they're higher today, up now by 8.2%. Rivian up 0.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thanks so much for that update, Charlie. Do appreciate it. Well, we talk a lot about the performance of the S&P 500 and the NASDAQ 100. By the way, the S&P 500 up more than 23% so far this year. The NASDAQ 100 up more than 22%. Large caps and mega caps have done well this year. We know that. Small caps, not so much. The Russell 2000 only up around 14% so far this year. Well, Mike Rohde thinks that could be about to change. He's Senior Investment Director at American Century Investments. They've got about $260 billion in assets under management, $45 billion of which is invested in actively managed small cap strategies. Mike joins us here in the Bloomberg Interactive Brokers studio. Mike, welcome.
Thanks.
Single biggest catalyst in your view in the last few weeks for small caps, or right now for small caps? What is it?
Yeah, I'd say the Trump election for sure, and the red wave.
Oh, there was an election?
There was an election.
Okay,
breaking news. I think, but that really just threw fuel on the fire that had already started. Around July, you started to see a market rotation towards small caps. What you have is expected earnings growth of nearly 18% next year. That's higher than mid caps. That's higher than large caps. the Magnificent Seven still growing at 20% plus next year, but that's slowing, whereas you have accelerating earnings for small caps, which have actually had negative earnings the last 2 years. So you're coming out of a small cap earnings recession and you're getting acceleration into next year. And we think that that's going to be a real growth driver for the asset class.
So the expectation, that the U.S. economy is going to do better, maybe tariffs push back on foreign imports. And so that's good for those smaller cap companies that tend to be here in the U.S., focused on the U.S., doing work in the U.S.
Yeah, exactly. So small caps get about 80% of their revenue from inside the United States. So if you're positive on the U.S., the best way to play that is with small caps. And reshoring has been a major positive catalyst for small caps in terms of, again, bringing manufacturing back to the U.S. And with Trump getting elected and tariffs are likely kicking in, that's probably going to accelerate reshoring even more, and small caps are the best way to play that.
Mike, one thing I wanted to ask you, since the election, what have you seen in terms of investment flows? Because if you look at the Russell is up about 2% since the election. It's pretty much the same as the S&P 500. Where has money been going into since the outcome?
Yeah, so there's been about $8 billion that's flowed into the small cap ETF since November. That's pretty good, but you actually saw $10 billion in July when the thought was that rates were we were starting a kind of rate cut cycle. So you still haven't seen it. Now, if you look at how large small caps are in terms of the percentage of the broader U.S. equity market, still less than 4%. That's 50% below average. And the last time it was this low was the 1930s. So small caps have been a forgotten asset class institutionally. And you get a lot of agreement that small caps are the place to be over the next 12 months, but you haven't yet seen the flows.
I feel like we have been talking about everyone saying, here's the reason to buy small caps for a long time. You even say it, and then it doesn't happen. Yeah. And yet you're saying it's not like everybody's running in.
Not yet. But I think that's actually, frankly, a good thing. It's kind of the empty room. I think now's a good time. There's a lot of expectation out there for earnings to accelerate next year. I think you're going to have to start to see that. Now, I was at a regional bank conference 2 weeks ago. It was the day after Trump got elected.
Regional banks have done really well.
Much better recently after 2 years of misery. And the CEOs were literally, I don't say literally, but like Jamie Dimon said, dancing in the streets, right? Doing the Trump dance. Because they're most excited about...
We have someone in the newsroom who does the Trump dance really well, but...
I'm not going to try it.
We're going to table that.
But deregulation is going to really benefit regional banks. And regional banks are also a big beneficiary of reshoring, right? When these big new projects get started, you need funding for those projects. And regional banks are really going to drive the growth in these kind of mini regional economies around the country.
Mike, what happens if the Fed doesn't lower rates to the extent that a lot you think they will? What happens if inflation doesn't come down to that 2% as easily?
Yeah, that is the question. I think you have to ask the next question, why? Okay, so why and what does the yield curve look like? So if we have growth outpacing, if growth starts to accelerate, right, 3% plus next year, in part due to Trump's policies, and inflation doesn't come right down to 2%, I think that's okay. That's good news is good news, and growth trumps, no pun intended, inflation. And then the second part of that is more about this shape of the yield curve. So yes, there might not be 8 rate cuts next year, but if you have a steepening yield curve, that's a really good environment for small caps. We had an inverted yield curve for 2 years. That's really tough for banks and for other spread type businesses. And as that yield curve reinverts, that's just a really good environment. So I'd say focus more on the shape of the yield curve as opposed to the absolute interest rate number or how many times the Fed will cut.
So the flattening out that we've seen in the belly of the curve, not great? Or
not great, but I think if you believe that we're going to have an accelerating GDP over the next couple of years because of Trump's policies, small caps are the biggest beneficiary of that.
But if we have an accelerating GDP and we have too much money back in the economy, which leads to inflation, we know from Fed Chair Jay Powell we're not quite there yet. I do think about the implications of that and the impact that could have on small caps or other sectors.
Yeah, I think it comes down to that. Why do we have inflation? Is there too much money flooding the system?
Why do you think we have too much inflation?
Right now or in the future?
Yeah,
right now I think we still have that hangover from all the COVID spending. Going forward, if you have, there could be an increase in inflation coming from the tariffs, right, or the threat of tariffs. And most of these companies will probably price that through to the end consumer.
Or tax breaks, some have said.
Right.
I mean, what's interesting is we had actually a listener, a Bloomberg terminal user, say, listen, we got to push back a little bit on tariffs and the impact on inflation because you know, maybe there have been economists and folks on our air that have also said maybe that's not the case. So we'll have to see on that one. But I do think about tax cuts creating more velocity in terms of money in the system. That could be inflationary. We just heard that with our Josh Green.
What about immigration policy and the labor market? Something I think about a lot. According to the Center for Migration Studies, there are about 11.7 million undocumented people here in the U.S. If they get deported in a very short period of time, there are going to be a lot of people who are looking to fill jobs.
But,
a lot of managers looking to fill jobs.
For sure. I think
and I'm wondering what that does to the labor market.
Yeah, I think the labor market is more in balance today than it was just a couple of years ago. So, yeah, the immigration, that is a potential risk to the inflation environment. But if you're getting that inflation because the economy is growing and there's more supply chains being built out here in the U.S., I think that's a good thing. If you get it in the fundamentals of these small cap companies, if you're getting that 10%, 15, 20% earnings growth, you know, our research shows that dollars follows earnings growth, and I think that's going to be viewed as a positive thing.
Although voters have said they don't like inflation, and that was a clear mandate. Hey, listen, before you go, we've got about a minute left here. Let's talk groups. What do you like in this environment? What don't you like?
Yeah, I think banks mentioned it's
the regionals in particular.
Regionals, yeah, they've had a bit of a run since Trump was elected, but they're still trading at a discount to where they were when Trump was in the office the first time.
Right.
And I think the sentiment is so negative. You have commercial real estate fears, which are unfounded so far. Credit cycle, unfounded so far. They're kicking off pretty good dividends, and they're under-owned by most institutional investors. So I think there's still room to run in regionals.
What about when it comes to some of the retailers out there?
Yeah, I think, okay, so that's the
reporting this week.
Yeah. You know, if you look at the consumer, I think we like to say it's trifurcated, right? That the high-end consumer is still doing really well. Low-end consumer, if you look at the dollar stores, pretty tough. But we believe that there are some areas that are bouncing off of the bottom. So if you look at boats have fallen off a cliff. They're down 50%. But we think there's a bottoming, and we think we're going to see improving numbers going forward. So it's all about that acceleration. So if you're getting that off of the bottom, boats, RVs, potentially housing. We'll have to see what happens with housing, but that would be a good catalyst for small caps.
Very quickly, energy, you like it. If there's more drilling, there's more pumping, more supply, won't that be hurt?
Yeah.
Won't that hurt the group just quickly?
No, and it goes back to that, really, to GDP. If you have an acceleration in demand, it should offset that. The other biggest difference is
about China, though. China's a concern with that.
Well, I think the biggest thing that we look at is the quality levels at these E&Ps and the small cap side. They're much more better run than they were 5 or 10 years ago.
Mike Road, good stuff. Come back soon.
Thank you.
This is Bloomberg Business Week.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow Jones Industrial Average lower, the S&P, NASDAQ. They are both higher on this back-to-work Monday. 25-point gain right now on the S&P at 58.96, up by about 0.4%. The Dow is down 66, a decline of 0.1%, while NASDAQ is up 127, a gain for the NASDAQ Composite Index of 0.7%. The NASDAQ 100 Index, full of small cap tech names, I should say, up 0.8%. Small caps, Russell 2000 up by 0.3%. 10-year 4.41%, the 2-year 4.27%. Gold up 1.9%, 26.10 the ounce. West Texas Intermediate crude up 3.1%, 69.13 a barrel. And Bitcoin now at 91,253. Bitcoin up by 2.4%. This week we hear from a number of high-profile retailers, including Walmart, which reports tomorrow morning. Kate McShane is an analyst at Goldman Sachs, and she says Walmart has moved beyond traditional retailing.
I think a lot of success that they have seen more recently has been with what they call their second P&L, or their alternative revenue streams, which is them building out a media business, a fulfillment business, their marketplace, data ventures, and they describe it as an ecosystem, all in which to better serve the customer with. But there certainly is a lot more tech and a lot more to understand from an e-commerce tech standpoint than there's ever been before.
And you can hear more of the conversation with Kate McShane on the Surveillance podcast. You can download it wherever you get your podcasts. Walmart right now down 0.2%. Target, which reports Wednesday, up 2.7%. The Metropolitan Transportation Authority has approved a revised congestion pricing plan for Manhattan that President-elect Donald Trump has threatened to terminate once he takes office. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thanks so much for that update, Charlie Pellet. We're getting some breaking news crossing the Bloomberg terminal. A redhead coming courtesy of the Financial Times. Trump Social Media Group in talks to buy the crypto firm Bakkt, that's ticker BKKTUS. Shares of that have been halted due to a trading pause. Shares of Trump Media and Technology are surging now to the best levels of the day, up 6%.
Yeah, and it looks like talks to buy the crypto trading venue close to an all-share takeover of Intercontinental Exchanges, BAKKT. So again,
it's owned by the
Financial Times. This is your world. You understand?
Well, the parent company of the New York Stock Exchange is Intercontinental. Is the Intercontinental Exchange, ICE, and they also own Bakkt.
So it would give them.
They also have a big stake in Bakkt, I should say.
So it kind of give them a venue, right, in terms of trading crypto.
I don't know what I would do.
Little information can be dangerous.
Full disclosure, I don't know what it would do.
All right, let's get to it. Folks, it's the largest diplomatic event in the history of Brazil, the Group of 20 Summit in Rio de Janeiro, where global leaders, Tim, are convening against a backdrop of rising geopolitical tensions. There is a lot going on.
Brazil's president playing host with an agenda focused on poverty reduction and climate change, but that's already being dominated by Donald Trump's election victory, Russia's war in Ukraine, the ongoing conflict in the Middle East, and planetary efforts to navigate an intensifying economic competition between the U.S. and China. We've got with us Bloomberg News correspondent and host of the Big Take podcast, David Gura, who drew the short straw and is on the beach in Rio de Janeiro. Great stuff, David. You're there for the week. I think that's a pretty great assignment. Not jealous at all. But you are actually doing some real work. What is top of mind for all these leaders? If there's one thing on their agenda, what is it?
Well, it's Ukraine, and that wasn't officially on the agenda. You look at sort of how these meetings come about, and there's a long process beginning with meetings of finance ministers, for instance, in which certain topics are raised and debated, and that all goes into the draft communique, the statement that these world leaders look at when they're here. And there was a very robust conversation just a couple of months ago about a new kind of wealth tax that these countries could implement to try to bring down deficits and pay for work on development and climate change and the like. But Ukraine has really superseded that here. There have just been so many developments, Tim and Carol, over these last few weeks, over these last few days, really, including a conversation that the German Chancellor Olaf Scholz had with Vladimir Putin, the president of Russia, after many months of stalemate and them not reaching out. and also the attack that we saw last night on Ukraine by Russia, and this announcement that we got as well that the United States is moving toward allowing Ukraine to have access to new U.S. weaponry to attack Russia on Russian soil. So a lot of that is kind of clouding the atmosphere here and is certainly being hotly debated among world leaders as they meet on the sidelines of this event.
Yeah, not everybody agrees, right, these global leaders, when it comes to Ukraine, and for that matter, what's going on in the Middle East. So do we get some kind of unity around some kind of conclusion or, you know, when it comes to action going forward?
I expect that we'll get a very turgid, difficult to understand, hard to parse, broad statement in that communique about those two conflicts in particular. Look, they were debating it today. We know that. How much to bring up those two conflicts, how specific to be about those two conflicts. Saudi Arabia, for instance, has wanted to include Palestine specifically in that document. Olaf Scholz kind of pushed back against that, just acknowledging that if you were to open up that can of worms about making those kinds of edits, you could really sort of derail the process and maybe not get a communique here at the end of this process. So I expect we're going to see something that's a bit more broad-based when we do get that final version of the statement. But you're right, Carol, it's something that's been sort of hard-fought here over the last day, and certainly by the Sherpas for each of these countries going into this meeting, trying to get language that could be at least palatable to the majority of these countries who've gathered here.
A lot looked at on the Biden administration front, David, as sort of a swan song for the current president and the outgoing president. I'm wondering how the specter of a Donald Trump presidency is not clouding, but is sort of, this is happening against the backdrop of it, how that changes things. Like, how is this conversation, or how are the conversations that they're having now different than they would be had Trump lost the election?
So Joe Biden, without question, is a much less influential person or powerful person here at this summit. And if you were to go back a couple of months leading up to the election, I think that Joe Biden would have seen an event like this as an opportunity to say to these other world leaders, look, we had 4 years of Donald Trump, and that was an aberration. That's not who America is or what America's approach to the world is. That has been rebuked by the election that we had just a couple of weeks ago. So he is here, having kind of final conversations as president with a lot of these world leaders whom he's gotten to know over the course of his presidency and vice presidency, indeed time in the Senate as well. These are long relationships, and he has for so long espoused the importance of having strong bilateral connections around the globe. You look at sort of who he's meeting with here. Yes, there have been these kind of handful of bilateral formal meetings that he has on the agenda. He's also had some kind of pull-aside, shorter meetings with Claudia Sheinbaum, the new president of Mexico, with Justin Trudeau, the prime minister of Canada as well. So he's trying to capture what his legacy is or what he wants it to be. Remind these world leaders of that, remind the world leaders of what he's done and his administration has done over these last 4 years. But to your point, Tim, there's this acknowledgement of the fact that he can do that till the cows come home, but things are going to change really radically on January the 20th.
So Joe Biden is on his way out. President Xi isn't going anywhere. President Xi, of course, of China, David. And my understanding from our live blog on the G20 is there are Chinese banners everywhere at the G20, and I believe they were at the recent APEC summit as well. China has never been shy about moving into the emerging world, access to raw materials, raw commodities. They are thinking about the future. G20, what does it mean for who has the most say on the global stage going forward, and what might be the U.S. role with a Donald Trump, President Donald Trump?
Well, it's a real push and pull. So I said that Joe Biden's power and influence here has really waned. President Xi's has really grown. It's funny you bring up that anecdote about flags. I was walking along the boulevard that borders Copacabana Beach here and saw many of those Chinese flags and learned from our colleagues that this is kind of standard practice by the Chinese government to encourage expats around the world when there are events like these to come out in force and show that kind of patriotism. And indeed, we have seen it in certain parts of the city over the course of the day. But look, President Xi is embracing this new role that he's playing as kind of a known quantity. A lot of these leaders know him and know what he stands for. He's going to be in power for the foreseeable future, so they can kind of depend on that. And he's really made overtures over the last few hours to the developing world, saying that there will be no tariffs levied on developing countries, for instance, talking a couple of days ago at the APEC summit about red lines that he hopes other countries won't cross so that China won't have to push back. But just while I dwell on anecdote here, I mean, walking around this city, you see the influence of China in terms of advertisements that are written in Chinese characters or just in notations that, Chinese companies or Chinese entities have given money to public parks, for instance. So it's the continuation of a policy that's been in place in this part of the world for a very long time. China hasn't given up on that. It's given them a lot of strength. here in this continent, in Africa as well. And they really see that kind of long game as something that's really crucial to their position globally, and they intend to kind of keep building on that going forward.
What's notable, I think, about that, David, is that the Chinese role has really superseded the American role in many countries around the world, including the one you're in right now.
I think that's absolutely true, and there's been criticism of that for many years, that the United States, after having meddled with and been perhaps over-involved in the governmental affairs of a lot of countries in South America and Central America, has stepped back in recent years, and there have been difficulties sort of engaging with a lot of these governments, and China has kind of welcomed that vacuum and indeed stepped into it. You bring that up, and I can look back at history and kind of see that deficit. All the while, as I look forward, I don't see that changing greatly, with the exception of Argentina. Donald Trump has a very close ally in Javier Milei, the president of Argentina, who is here and delivered what we understand to be kind of a barn burner of a speech to other world leaders today. He's been kind of palling around with Emmanuel Macron of France. He's a very public and large presence here and stands for a kind of Trumpian brand of politics that's different. I won't say it's widely shared. Another dynamic to really track here over the course of this meeting is that between him and Lulu here in Brazil. They stand for totally different things, and there's a real kind of interpersonal tension between the two of them. But he's, I think, the closest thing to a real ally that Donald Trump would have here as he begins his presidency.
Two things I want to get to. First up, though, climate. I've been thinking about this a lot. I think we all have since the election outcome. The developing world often sees it, feels it the most. Is climate front and center at all? Where does it stack up among the G20 leaders at this point?
So that is an official agenda item, and there were debates about that here today, and it is something that gets at least lip service from a lot of these world leaders. Before this meeting, as I mentioned, President Biden was in Peru for the APEC summit. He then traveled to the rainforest in central Brazil, the first U.S. president to visit a rainforest, and that apparently had a very profound impact on him, and he committed to more money going to rainforest protection and preservation. So that's all happening, and it's part of this kind of broader picture. We talked about Ukraine just a few moments ago. I think President Biden is trying to solidify his legacy, but also make sure that he can do as much as he can before he leaves office to make sure that mechanisms are in place to kind of carry through what he sees are very important parts of his policy portfolio. And one of those, of course, Carol, is climate. So we'll see here. I know that there is this kind of clarion that if the U.S. does step back, as we anticipate it will under Donald Trump, this is a moment when I think there'll be a lot of encouragement of China to do more, but we'll have to see sort of how that plays out.
Hey, just got about 30 seconds left here. You did mention the photo. There were missing people, the family photo. Did you figure out here what happened? Just quickly.
I have a couple of updates. Prime Minister Trudeau and Prime Minister Meloni of Italy were, in fact, in a bilateral meeting. They were late because of that. Apparently, President Biden was late because of timing as well. We've now all seen the photograph and seen them missing from it. It sounds like now they're going to try to retake that picture. They're all supposed to gather for dinner later tonight. There'll be an opportunity to have everybody together. They'll give it another shot and see if they can get everybody on stage.
Are you sure they weren't on the beach, David, like
marquee
getting a little
photo.
sun or something?
Emmanuel Macron and his wife were out last night, very close to where I am, taking selfies with people here on the beach. So it is entirely, I won't rule it out, Carol, entirely possible.
Well done, well done. Bloomberg News correspondent and host of the Big Take podcast, David Gora, out there in Rio de Janeiro, Brazil. So appreciate that update.
You could just use, anyone who's been in a family photo knows how hard it is to coordinate. Photoshop, people. Get them in there.
No, that's not real.
Coming up next, we're driving to the close. This is Bloomberg.
3:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got the Dow Jones Industrial Average lower, S&P, NASDAQ, they are both higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. It is a mixed market today with the Dow currently down 64 points. The S&Ps are higher by 0.4%, while the NASDAQ is outperforming. That gains 0.6%. The U.S. 10-year yield at 4.41%. Gold is higher by 1.9%. Oil is also climbing. And Bitcoin, that's higher by 2.9%. Among the main 11 S&P sectors, leaders were energy and telecom. Only industrials were in the red. And leaders to the upside in the Dow, Boeing and Apple, while Nike was under pressure and led to the downside. In deal news, the FT reported that Trump Media is in talks to buy crypto firm Bakkt, and QXO made an offer to acquire Beacon Roofing. In the EV space, Tesla jumped on a report the Trump team is considering easing self-driving rules. Uber fell on that news. And wrapping things up, AECOM reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. Also getting word that President Trump will be meeting privately with Coinbase CEO Brian Armstrong. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, TikTok, everybody. Just about 18 minutes left in today's trading session. Here on this Monday, we've got slight gains, as you just heard from Charlie, in the S&P 500. Outperformance in the NASDAQ 100, up about 145 points. Good for a gain of 0.7%. Wasn't so great for stocks last week, but again, earnings are going to be front and center with NVIDIA and a few others reporting this week.
Yeah, we're going to hear from the retailers, many of the retailers. So we get a good read on the consumer. Let's see what Jeff McLean has to say about this. He's CEO over at Solidarity Wealth. It's a wealth management firm based in Utah. They've got about $600 million in assets under management. Jeff joins us here in the Bloomberg Interactive Brokers studio. I'm wondering what's top of mind for your clients right now. When you're out there talking to them, what are they asking you? What do they want to know?
Yeah, I think a lot of it is election related. I mean, what does the next 4 years look like? And the excitement or nervousness, depending on the political backgrounds of where they're looking at the markets. From our perspective, I mean, I think in either case, you were going to have some consistency of the current administration continuing on or Trump. We've kind of seen the show before. It'll be different people involved, but we kind of know what's coming. And you're seeing that a little bit in the market of a bit of steadiness associated with it. You're essentially going to have divided government with the House being so tight. It'll be incredibly tight, if anything, in the House.
You think so?
Yeah. I think as you talk about the people he's named, they're going to have to give up their spots in the House. You have a few elections.
I wonder if there's somebody with a whiteboard saying, hey, wait a minute.
Yeah, his name is Speaker Johnson.
Yeah, and I don't think they're being that strategic. And so divided government's good for the markets, right? Nothing's crazy going to happen with divided government.
I would think they are being strategic because they want to, and
get stuff done.
Susie Wiles, the incoming chief of staff, made the point at a fundraiser last week in Las Vegas that was basically like this, according to the New York Times, that, hey, we got 2 years to get everything done because the history, books show that if you have a trifecta in government, it's not forever.
Yeah, that's true. But at the end of the day, special elections that are going to have to come up to replace those seats, Republicans do terrible in special elections historically.
Interesting.
And so I think at the end of the day, the House will be divided, which again, I think is good. Nothing crazy can happen. If you start with a proposition like I do, that most government officials are not great people and they're going to trade in their own self-interest, divided is great. They can't do anything.
Jeff's opinions on his own.
Yeah, there's a lot of places I could go with this because.
Where do you want to go?
Well, is that a concern to you in terms of the way that the government has been run and the way that the government potentially will be run in the new administration? There are a lot of folks very close to the president who have a lot of money.
Yeah, and I would say that's always true, right? Whenever there's power, money is attracted to it. And so that's always been the case. I think long-term, is that a problem? Yeah, short-term, no, I don't see any issues there. I do think some of the changes they're going to make do help certain sectors over others, right? RFK Jr., Pharma has obviously traded down since that name was nominated to the position. That's probably justified.
We'll see if he gets confirmed.
Yeah, that's a big if.
All right, so the week after the election, I'm going back to not last week. Last week, stocks were down about 2% if I'm looking at the S&P 500. The prior week, they were up about 4.7%. So we've seen a little bit of a correct, but not all the way back. I mean, are what we're seeing right now is, all right, some enthusiasm, but we don't really know what policies are ultimately going to be put into effect. So hold on, everybody. Kind of slow your roll and let's see.
Yeah, as a long-term...
Or is there anything that you feel like you can bank on right now in terms of a Trump administration, what it means for a play in the equity trade?
Yeah, from a long-term perspective, all of it right now is noise. From a short-term trading perspective, volatility is going to continue to spike with every new announcement, depending on... Because he's not going to nominate an, steady... keep it as it is type person. He's just not. And so every new announcement is going to drive volatility in a specific
Like it kind of did in the first term.
Yeah, and it did. But you're going to see that with the Treasury, whoever he names and the cat fighting that's involved right now, whoever he names, you're going to see some trades based on whoever that is, depending on if it's someone from a traditional finance background or is it someone outside, right, an unknown to the financial world.
I got to say, these conversations, I like macro, but it's like, okay, so what do we do?
Yeah.
Because if you've got a portfolio, you're thinking about it. I think about investments. I'm like, what do I do? Do I things have had a nice little run this year, but is it going to get a little sketchy next year? We just don't know. So what do you say? You are, responsible for managing the wealth of your clients.
Yeah.
What do you do right now? Have you made any changes to portfolios since the election outcome?
Yes. Yes,
we
have.
What have you done?
And so, I think part of that is trimming allocations in certain segments and areas that aren't going to do well. So generally speaking, defense could be a problem if, for example, you own Lockheed Martin, right? Mm-hmm. They are going to be a target of what Vivek and Elon Musk are doing. Their no-bid contracts probably not going to be looking good here in the next couple months if Elon Musk and his team are successful. Another group that could be...
Until senators and members of Congress and House reps say, by the way...
Our constituents are pretty upset about this.
Yeah.
Yeah, there is part of that. But remember, from an administrative law perspective, presidencies have enormous power to do things independent of Congress in both administrations. And so they can drive significant change. Just changing the no-bid contract thing alone to ban any no-bid contract, that's a problem.
What does that mean? So nobody can bid?
Right. So they direct it directly to Lockheed Martin of you win this contract, and it's not an open bidding process for that government contract, which are billions and billions of dollars.
You've seen the opposite of what it's always been.
Yeah, you've seen Elon Musk fight this from his side of saying, hey, we can do these things. We're doing them way cheaper than NASA and all these other things, but yet NASA's getting these, or Boeing is getting these gigantic contracts and are not performing.
So trimming defense, what else have you been doing for your clients since the election?
I think Boeing's, and although I agree with their CEO change, I think that's a good move. I think long-term Boeing could be good. From a short-term perspective, Boeing's problematic for a variety of reasons. It has been, and I would argue it's going to continue to be problematic from a go-forward. I think there's also some trading opportunities in what I would call the anti-ESG trade, those kind of industries that aren't favored in the ESG, where that's at times defense like Palantir, which will probably be a winner from this administration, oil and gas, although not broadly like your Exxon or Chevron, but think of the pipeline type of producers and those actually pulling the minerals out of the ground.
Even if we see a decline in demand?
I think from a long term, they have some great opportunities because you're more likely to find value there. Because the huge part of return is what you're buying it for. Yeah. Because of the disfavored nature of those industries, you can get better valuations than the broader market. And so over time, that's going to play out. Even if some people want to hold their nose at it, we still need oil. It funds just about everything in our society.
You're the second person today that is looking at small caps. Forgive me, only about 25 seconds. You like small caps? Put money there? Or you are putting money there for your clients?
We are, and I like it from a go-forward perspective. You have to be careful, right? Not all small caps are created equal, but yeah, small caps can be an incredible opportunity right now based on valuation simply compared to large caps.
All right, we got to leave it there.
Cool.
Wish we had more time. Good stuff. Come back.
Thank you.
Really appreciate it. Jeff McLean. He's Chief Executive Officer at Solidarity Wealth. As we said, they're based in Utah.
Get any snow yet?
Yeah, it's snowing right now, actually.
All right.
Ski season is here. Come to Utah.
Skier. Have you ever skied in Utah?
Of course.
Of course he has. What a
Very easy flight.
Yes,
All right.
it is.
We're counting you down to the close on this Monday. That's next.
Listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio and Television.
It is Bloomberg Business Week on this Monday afternoon. What would you like to hear about on Bloomberg Radio, Carol? Well, you know, it is up to you because we do this planning call every morning, and
I like to hear more about everything because there's
like
a business market, political
it's a
story to
democracy.
everything.
We all get to decide.
We have an incredible team.
We do have an incredible
little horse
team.
trading, no, sometimes going on too, right?
I don't know. Is there?
Or just what I say
Okay.
goes. I'm just kidding. I'm just kidding.
Okay, I'm not going to touch that. But what you can do is you
It's a
can give us your
group
feedback,
effort.
and you can help make shows like ours even better. Just take our Bloomberg audience survey, visit youtube.com/Bloomberg podcast, click the link in our profile or community section to take the survey. It's hosted by our partners over at Material. Fill it out now at youtube.com/Bloomberg podcast or scan that QR code that you see on the screen right now.
You know, I'm from a large family, so I get a little scrappy, and it was really hard being heard with 5 older siblings above me, and so I get a little like, I don't know, pushy's the word.
I'm pulling up.
And I was really shy as a kid, so it's a lot for me to speak up. I know it's hard to believe.
So proof that even if you're shy as a kid,
you can. Yeah, become a little forceful.
Hey, I wanted to go back to this story. It was a redhead earlier
Okay.
in the Financial Times. Donald Trump's social media group is in talks to buy the crypto trading venue Backed. It is owned by Intercontinental Exchange. That is ICE, the parent company of the New York Stock Exchange.
Don't you think this is interesting?
I do think it's interesting, and I think it's interesting for a couple of reasons. The first CEO over at Backed was Kelly Loeffler. She was former head of marketing at ICE. She was also a senator for Georgia during Trump's first presidency. I'm reading this from the Financial Times. She's co-chair of the committee organizing his inauguration in January. She's also married to Jeff Sprecher, the founder of ICE, who's also the chair and the CEO. So there's a relationship between the president-elect and the former CEO of BACT, but also Intercontinental Exchange.
It's kind of interesting. And,
Executives at ICE.
Donald Trump has gone kind of back and forth, I feel like, with crypto. This deal.
I know. He's going forth at this point.
He's all in.
Yeah. Actually, the Wall Street Journal reporting that he's meeting with Brian Armstrong, the CEO of Coinbase, today.
Which is kind of wild. And we have seen crypto rally. We've seen DJT, his social media and technology company. Shares have rallied since the election. Reading from the FT, it says a successful deal would deepen Trump's moves into the cryptocurrency market after he began promoting a new crypto venture set up by longtime business partners, World Liberty Financial, from which he stands to earn significant fees. Crypto markets have also soared, as we said. Bitcoin is up more than 30% on speculation that his administration would enact favorable legislation for the industry. So it's Trump media and technology. So there's a lot that can be thrown into that.
Yeah, but Truth Social is the company that they have right now, and that's just a tiny firm in terms of
doesn't book a lot in revenues. 2.6 million in revenues this year.
Exactly, and what, a $6 billion valuation?
Yeah.
Many people would argue it's detached from fundamentals.
Yeah.
But it's interesting. I don't know what they would actually do with this firm.
Yeah, I don't know. I mean, I think it continues to evolve, and it has since the beginning. ICE and BACT, we should say. It's BACT, can you say that?
BACT.
Yeah. Declined to comment, and so we're waiting, at least according to the FT, for some more commentary around this. The crypto business has been set up to hold digital assets such as Bitcoin and Ether on behalf of customers, but failed to gain traction and made operating losses of $27,000 from revenues of $328,000 in the first 3 months to September 30th. BACT is planning to build a trading platform for institutional investors. So, I think this is kind of interesting, and I get a little uncomfortable when I think about politics in general and the conflicts of interest that are going to be here potentially.
Well, you think about it from our perspective as journalists who cover financial markets, what we're allowed to and not allowed to hold. We're not allowed to hold individual stocks, and we can only invest in broad-based index funds type. I think those are the rules.
Yeah, or if you buy something, you've got to hold it for.
But politicians don't have that same, and there's been a lot of criticism of members of Congress and what they're allowed to hold, what they're allowed to buy, given that they have certain transparency into, okay, what are the things we're going to buy? What is the government going to spend money on? I think that creates some potential issues.
I think there are questions to be asked, certainly by journalists and certainly by the American public. But anyway, interesting story. We are living certainly in interesting times. Again, the FT, Trump Social Media Group, in talks to buy crypto firm BACT. All right, folks, we are back to the equity markets. The closing bell starts right now.
Closing bells, full market coverage of all today's actions now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through the Closing Bell, a global simulcast. It starts right now. We're joined in the TV studio by Scarlett Fu, in the radio booth by Carol Massar and Tim Stinovic. And hey, look at that. The gang is all back together. Aww. Carol, I know you like to make this show all about you, but I think we have to acknowledge the return of the prodigal daughter, Alex Steele.
We are so happy to have her
Welcome back, Alex.
Good to be back, guys.
We have missed you. We have missed you. And haven't you missed Romaine using the word pittance? I kind of love that.
I always miss Romaine, of course.
Having said that, looking at a day where, we've got a bit of a rally and pretty broad-based, very different from the tone last week. But, I feel like earnings are going to shape, especially NVIDIA earnings might shape.
Yeah, I was going to say, kind of
this week.
I think Wednesdays after the market, NVIDIA, that's what everyone's focused on. We also hear from retailers this week, including Walmart, among others, so get a good read on the consumer. So we're not done yet with earnings season and going to get a good view into quite a few different areas of the market.
Yeah, NVIDIA has become like a big event in the same way that the FOMC decision or the monthly jobs report has become a big event. There are watch parties devoted to it, so we'll be all over those results.
Wait, there are watch parties?
Yes.
Aside from us?
I didn't get an invitation.
At
That's
bars.
because we are on air. They actually Guys, they actually played us at a watch party.
Yeah, they played
They
us.
did. Yeah.
Joe Weisenthal.
This is
Special
totally
NVIDIA
new
coverage.
information for me.
Yeah.
But apparently, options are just implying what, like an 8% move to the up or downside for NVIDIA. Isn't that slightly less, I think, than normal?
Yeah, I mean, definitely some of the bloom has come off the rose. We should point out today here, when you look at the markets, the biggest drag right now on the S&P 500 is NVIDIA, believe it or not, down about 1% on the day, while Tesla, of course, leading to the upside. The net effect of it all is an S&P 500 that looks like it's going to close out the day higher by more than 20 points, or roughly 0.4%. The Dow Jones Industrial Average not participating in the rally today. It's going to close lower by roughly 50 points, or 0.1%. The NASDAQ Composite and NASDAQ 100 each higher by more than 100 points, 0.6% on the NASDAQ Composite, and the Russell 2000 squeaking in with a modest gain of about 0.1%.
Just going to say, don't cry for me, NVIDIA. It's up more than 180% so far this year. As for today, the S&P 500, Scarlett, most names are higher, 320 to be exact, 182 to the downside, 1 unchanged.
Yeah, given how modest the actual advance in the S&P 500 is, when you look at the sector performances, it's green all around. Only one sector in the red, that is industrials, losing about 0.2%, but everything else is green, led by energy and communication services, each up at least 1%, and REITs are gaining about 0.9%.
All right, guys, I'm going to the names that really dominated the S&P 500, the NASDAQ 100 today. These are among your top gainers.
You're just sticking with the S&P, is that?
No, and the NASDAQ 100. Okay. Does that work for you?
Thank you.
Okay.
I think it's kind of overlap.
Here,
sure.
too, please. Okay, well, I believe in overlapping. All right, so let's get to Super Micro, guys.
Welcome back, by the way, Carol.
Thank you very much. I missed you. I had romainitis. I didn't know if they told you that. That's why I was actually home. Well, it's not a great thing. All right, Super Micro Computer. It is your #1 gainer in both the S&P 500 and the NASDAQ 100, up about 16% today. This company approaching a deadline, as you know, to either file a delayed 10K annual report. So we're going to watch for some headlines on the Bloomberg, or submit a plan to file the form to the NASDAQ in order to remain listed, I should say, on the exchange. Deadline is today, so we'll be watching for this. You know some of the concerns, damaging report from a short seller, U.S. Department of Justice probe. There's a lot going on in this one, but investors certainly bidding it up. Another one, Moderna, up about 7%. It was upgraded to buy from hold over at HSBC. Analysts saying the market isn't giving enough credit to the firm's pipeline, so an upgrade, but they did cut the price target to 58 from 82. Stock's down 60% year to date. New price target means you got some upside to this one. So again, Moderna finishing the day just under $40 a share. Tesla, this is your #4 gainer in the S&P 500. It is, of course, leading self-driving stocks. This is members of President-elect Donald Trump's transition team, are seeking to ease federal framework for fully self-driving vehicles, which, of course, Tesla would be a beneficiary of. So investors moving into this one. Tesla shares up 5.5% today.
All right, you got the gainers, I got the decliners. I do want to start with NVIDIA. That company, of course, reporting after the bell on Wednesday. Shares falling today by 1.3%. The information out with the report that the company's asked its suppliers to change the design of the server racks for its new Blackwell GPUs due to an overheating problem. Maybe we'll get a little more information about that on Wednesday, maybe not. Should note that even with today's 1.3% decline, shares are still higher by 183% so far this year. So take that with however you will. Palantir shares falling today by 7%. They fell as much as 10.5% intraday, the worst intraday since August. Follows the record run that the company has had this year, and Friday's record high after the company said it would move later this month from the New York Stock Exchange to the NASDAQ. Even with today's decline, down higher by about 260% so far this year. And finally, Uber shares fell about 5.4%. You heard Carol mention the report over the weekend from our team here at Bloomberg News about Tesla. Well, that's actually not so great news for companies like Uber and Lyft, because if Tesla was a beneficiary of a framework for fully self-driving vehicles from the federal government, then ride-hailers such as Uber and Lyft would face more competition with a network of robo-taxis from Tesla that could compete with these ride-hailers. Once again, Uber down by about 5.4% today.
True, but didn't Waymo and Uber expand a partnership or something? So maybe there's it's Lyft that also seems to be struggling on that way. All right, let's get to the bond market, guys, because I was talking about the fact that when I left 4.5 weeks ago, you got the 10-year yield was at like 3.6%. No more. We're about 4% for the 10-year yield. We're a little bit lower on the bond market today. A little bit of buying came in about halfway through the day, but just for some perspective, this has been a massive re-rating in just a few weeks, guys.
All right, let's get to some of the stories stories that have definitely piqued our interest on this Monday. And this one has to do with what economists are kind of grappling with in a second White House by Donald Trump and his team. And basically, one economist over at Nomura, Rob Superman, he is talking about adding Truth Social, right? We know that as journalists, that a lot of information got announced on Twitter last time around, and so we kind of have to watch what's going on. But they're also rethinking their models, hiring in teams that maybe they just need to kind of react differently and get ready.
Yeah, analysts are scrambling to adapt. They're developing new models. They got more people hired to crunch thousands of lines of trade code and putting a lot more face time with nervous clients. The whole idea is to produce forecasts that will help traders, businesses, and governments navigate the new chaotic world. But you guys remember 2016 to 2020, just being glued to Twitter to...
Yeah, didn't we go through all this before? And isn't this kind of a losing battle?
We did.
I mean, some people get it right, but most people just get it wrong.
But you got to make models, right? As economists, that's what they do. So they got to figure out.
They have like 20 different models. That's the problem.
But just in case one policy goes one way doesn't mean the stocks go that way. For example,
well, that's the point.
With in the first Trump presidency, oil stocks didn't do well, and alternative energy stocks and solar stocks did well, which you thought would have been the opposite.
Yeah, that's what I'm saying.
All right.
I'm glad.
So add that to the models.
Thank you.
Moving on to a new model.
You know what? There's another story that we're watching, and that is about how schools, an elite private school in Miami, is building a $30 million endowment in order to provide teachers with a stipend, because all these schools, boarding schools, private schools in southern Florida, need to account for the fact that there's Wall Street South talent coming in, but they don't want to move there unless their kids have a place to go to school.
I'm fascinated by this story because we heard so many anecdotes, particularly when Ken Griffin announced they were going to move down there. A lot of these folks are going down there and they couldn't find, and they had to move back to New York. They were like, look, we just can't find a place for our kids, so until that's sorted out, it's going to be some growing pains here in Miami's development.
But isn't that kind of crazy that the endowment is going towards teachers because they can't afford to live there versus an endowment going towards, say, scholarships or something? Like, there's something fundamentally wrong with this model, no?
$11,000 a year in stipends to help these teachers with rent payments or mortgage payments.
Especially when you're charging $52,000 a year in tuition. The only thing I would say, it just speaks to the larger housing crisis.
Yes.
Like, you have all these great cities and things going on, and yet people can't afford to work
New Yorkers
there.
Who send their kids to private school would think $52,000 a year.
It's a bargain.
That's a bargain. Oh, that's bargain. Yeah, I would love to be paying less than that. But also to this point too, and just on the Ken Griffin, there was another story too about him, building his empire down there. And there's apparently one big building that's kind of in the way of everything he wants to do. And apparently there's this mysterious buyer who's buying up all the individual units in this condo building. No one seems to know who it is, but we should just point out this building is in the way of building up that big sort of campus that Ken Griffin is trying to build.
Maybe they could put teachers in there to live, and then they would solve the housing problem.
So is that where the endowment money is going?
Maybe.
I like how you think, Tim Senevic, but that's not going to happen. You know that.
This
All right.
Is it Goliath?
This is like an extra layer, Carol, to your point of the housing crisis. Like, this is like an added-on layer.
But this is happening all around the country, right? I mean, in Silicon Valley, teachers and firefighters and policemen don't have anywhere to live because houses are $2 million. So it's just happening wherever there's a gravitational pull.
Yeah, stop just, it's not just like building homes, right? Build affordable homes where people need them. Like, I think it comes down to that. All right, I am so happy to be back with our normal team. So, it's good
We're
to be
far
back
from
with
normal,
everybody.
but thank you.
We missed you, Alex.
Yeah, I have no idea what she's talking about.
Yeah, none of us are normal. All right, that's a wrap. Our cross-platform radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Hey, everybody. We just want to bring you a headline right through our story, just crossing the Bloomberg. President-elect Donald Trump's transition team is considering pairing Kevin Warsh, a former Fed official in the Treasury Secretary role, with hedge fund manager Scott Bessent as director of the White House's National Economic Council, according to people familiar with the matter. So it does sound, despite all the jockeying that's been going on, it sounds like maybe the pieces are starting to fall into place, but we're still awaiting an announcement.
Bessent was offered the NEC post, but told Trump that he wouldn't accept until he knew who the Treasury Secretary would be, the people said. Warsh has been invited to Trump's Mar-a-Lago club, where transition efforts are based, to interview with the president-elect in the coming days.
All right, so we'll continue to track that. Great read on the Bloomberg, and check it out at Bloomberg.com as well. We got to talk about AI. I'm getting ready. We're both getting ready to go out west to the Schwab Impact Conference, I'm going to be moderating a panel that's all about AI and what's kind of going on.
When is that panel? I hope it's not during our show.
Thursday morning.
Oh.
Just before our show.
Okay, good. So you'll
even got a
be
demo
there.
and everything. Like,
wow.
Yeah. We're pulling it all out, man.
I will be eating breakfast.
He will be eating breakfast.
Well, you do that. But thank you for doing that.
You're welcome.
Yeah, it's interesting, like kind of getting an idea for the way the incoming Trump administration is going to handle AI. Many people in the tech industry say we're likely to reach AGI, that's artificial general intelligence, and it can outperform humans at most tasks within 4 years. If they're right, we've just elected our first AGI-era president. That would be Donald Trump.
Can I tell you in prepping for this panel that I'm doing, that was one of the first things that came up that said, this is an administration that for the first time has to deal with AI. The first go round during Trump didn't have to deal with it. And certainly the Biden administration, even though there was stuff going on, it's a different thing. And so regulatory, how they get involved is important.
So let's see how it's playing out in Silicon Valley. For that, we go to Ellen Hewitt, Bloomberg News Tech Features writer. She writes for Business Week about how Trump's anti-regulation pitch is what the AI industry wants to hear. Check out her story now on the Bloomberg and at bloomberg.com/businessweek. Ellen, Trump's views haven't been exactly clear when it comes to this type of technology. So I just want to start with you giving us an overview about what we've learned about how the president-elect thinks about AI.
Well, that's such a great question and something that people in the AI world have been trying to scrutinize, given that he will be taking over. And as you said, he's likely to be kind of the, or it's possible that he'll be sort of the AGI president, the president whose administration oversees rapid advancements in this technology. And based on what Trump has said himself, it's not really that clear. He gave a really interesting interview with Logan Paul a few months ago in which they did talk about AI, and when prompted about super intelligence, Donald Trump called it super duper AI, which I don't think
is that a technical term? Is that one thing you hear that around the valley when you're talking to those OpenAI folks?
Yeah, so super duper AI, that was something that people were laughing about in the industry. He expressed a lot of fear about deep fakes. He had apparently been shown some sort of deep fake in which it looked like he had been endorsing a product, and he was like, did I forget that I had filmed the script? No, it had been, artificially made. But he also expressed a lot of delight about seeing a script that had been written for him, like a speechwriter AI that had written a script for a Trump speech that he thought was really good and so fast and very beautifully written, or maybe something close to that. So it seems like he is having a mix of reactions. And so meanwhile, people have been instead trying to scrutinize and speculate about what he or his administration might be doing once they are in office.
Ellen, what about, the growing momentum among researchers, tech leaders about risks due to AI, including Elon Musk, who is very much in like Flynn with Donald Trump, at least at the moment, Steve Wozniak. I think about Jeffrey Hinton, the godfather of AI, who recently talked with our David Weston. There are those that are saying they want AI labs to kind of pause some of the training of new generative AI. How might that influence what we get in terms of oversight or regulatory?
Totally. So this is the big question in Silicon Valley right now is, should we be moving faster? Should we be removing regulation in order to move faster? Or should we be advancing more slowly and with more guardrails in order to try to ensure safety? So obviously, the Valley has been talking for a long time about possibilities of existential risk from AI, so catastrophic outcomes in which maybe the AI takes over or wipes out humanity. This has been an ongoing, bubbling conversation in the Valley, has really taken off in the last couple of years. At the same time, some other people are more focused on trying to maintain a competitive advantage over other countries such as China, so wanting to advance AI faster and potentially advocating for fewer regulations. So in the Valley, there's kind of this divide between what we might call the accelerationists or the EAC group versus the people that are a little bit more inclined toward AI safety or AI alignment. That's an overgeneralization, but those are pretty, two pretty big camps. And the accelerationists are really celebrating a Trump victory as a win for them. They're basically saying they anticipate that Trump will take the foot off the brakes, if there ever were brakes on in the first place, and really let the technology move faster. And at the same time, there are some question marks. You mentioned Elon Musk. He's been kind of a loose cannon. We don't know where he might.
What? Elon Musk? Loose cannon?
Who knew?
No, I'm just kidding.
But
yeah,
I thought,
he has.
I thought Elon was like, hey, this is really scary stuff here.
Yeah.
This is why we need to regulate this stuff. The machines and the bots are going to take over the world. The sky is falling type of thing. I thought that's where he was over the last decade.
He's generally been there, but I think, you know, it's a little hard to predict what he might choose, but you're right. He did support, for example, SB 1047, which was this AI regulation bill coming out of California that almost got made into law, was vetoed at the last minute by Gavin Newsom, the governor of California. So that was a bill that was generally seen as pretty conservative, something that some major AI labs opposed, and so Elon, you know, had supported that. He has said in recent interviews that he would support a regulatory body that would at least be able to see what's going on in some of these advanced AI labs and ring the alarm if it looked like something was going awry.
Yeah.
But at the same time, you know, he's been known to make off-the-cuff decisions related to, you know, he has his own AI company. You know, maybe that is something that would push him to reconsider a regulation.
At the same time, I mean, the EU is moving ahead, right? European officials, and they recently proposed the first ever legal framework on AI. So, I mean, do they ultimately set the tone maybe on this?
Well, it's a good question because I think that sort of, you know, global perspective on AI is going to inform how, you know, a Trump administration thinks about slowing down or speeding up. You know, of course, they want to stay competitive with China. They might also be looking at what other countries are doing. But to be honest, you know, Trump has been pretty open about his pledge to repeal the executive order that Joe Biden put in place that would have, you know, did establish a regulatory framework for AI. The Trump administration has been clear that they would like to repeal that. What actually ends up happening, still to be seen, but you know, I don't think they are taking other governmental bodies' actions as necessarily a reason that they would follow the same suit.
What's the tone in the Valley right now? There's some really prominent folks who are very happy the former president was elected once again. What's the overall tone?
Yeah, I wrote a little bit about this for our tech newsletter last week. I think there's a sense that if you're a Trump supporter in the Valley, you know, 4 years ago, 8 years ago, you might have been a little bit quieter about that. And now it doesn't seem like you have to be quiet. You are not going to get socially rejected. There's enough Trump, you know, outspoken Trump supporters among, you know, some big names in the Valley. That means that, yeah, being a Trump supporter no longer makes you a pariah. I think that's a real cultural shift that has happened in the last 8 years. You know, thinking back to Trump's first victory in 2016, there were a lot of tech leaders that were very supportive of pushback against some of the president's policies. And I think that's a little quieter this time.
Hey, really quickly, like 20 seconds, the Chips and Science Act, semiconductors, so important to AI, but in general important. Do we need to be concerned that there's going to be a rollback or anything? And just really quickly.
It seems pretty unlikely. I know people are sort of worried about it because it's very important, but not seeming likely.
All right, great stuff. So appreciated. Ellen Hewitt, she's Bloomberg News tech features writer. Just a great story. Check her out at Bloomberg.com and on the Bloomberg. Coming up next.
We're joined by Nor Swade, founder and managing partner of Global Ventures. We're going to talk VC.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, the S&P, NASDAQ both advanced today. Stocks climbed as Treasuries halted a sell-off that drove 10-year yields near 4.5%, with traders keeping a close eye on news around President-elect Donald Trump's administration. The S&P today up 23 to 58.93, up 0.4%. The Dow down 55, a decline of 0.1%. NASDAQ up 111, up by 0.6%. 10-year at 4.41%, the 2-year 4.28%. Spot gold up 1.9%, 26.11 the ounce. West Texas Intermediate crude at 69.26 a barrel, up 3.3%, and Bitcoin a 3% surge there, now at 91,827 on Bitcoin. Shares of Bakkt Holdings more than doubled today after a report said President-elect Donald Trump's Trump Media and Technology Group is in advanced talks to acquire the digital asset marketplace launched by the parent of the New York Stock Exchange. Bakkt shares up today by 162%. DJT up by 16.6%. 15 New York City and Hudson Valley counties have been elevated to drought warning status with a statewide drought watch declared. And the Metropolitan Transportation Authority has approved a revised congesting plan for Manhattan that President-elect Donald Trump has threatened to terminate once he takes office. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Do appreciate it. Well, Carol alerted me of this story earlier today. BlackRock receiving a commercial license to operate in Abu Dhabi. It's the latest sign that the asset manager is looking to deepen its ties across the region. Abu Dhabi and Riyadh are competing with Dubai to be the Middle East's main business hub. And for BlackRock CEO Larry Fink, having operations in the two countries makes sense. Carol, get this. Abu Dhabi and Riyadh each control over $1 trillion in sovereign wealth.
It's a lot.
Making them among the biggest pools of capital in the world.
Yeah, it's massive when you get kind of your head around all of this. Lots of money in the Middle East. We know that. So does Noor Suede. She's founder and managing partner at the UAE. Let's try that again. UAE-based international, third time, fourth time's the charge.
You got it, Nasser.
UAE-based international VC firm Global Ventures. They've got offices all around the region in Dubai, Cairo, and Riyadh. Noor is the only Arab woman in the Middle East running a VC fund. That fund about 7 years old, and she is joining us here in our Bloomberg Interactive Broker studio. Welcome, welcome. How are you?
I'm great, thank you, and thank you for having me. It's good to be here.
It's great to have you here. I'm going to start with the elections here in the United States, because there seems to be, doesn't matter where you go, somebody has a comment on it. I am curious, does it impact you in your world at all in terms of investing or what the U.S. is doing?
Not really. I think especially with Trump, we've been here before. We kind of know what that presidency was about last time. And for us, it's, it's business, it's venture capital, it's entrepreneurship. That's where our focus remains.
And so when you talk about that focus, what kinds of opportunities, because there is a ton of money flowing into the Middle East overall, and it does feel like they are working very aggressively to reinvent kind of their economy and where growth is going down the road. So tell us a little bit about that and what you are seeing on that front.
So last quarter was the first quarter where we had 51% of venture dollars in the region actually coming from abroad. So that ecosystem is growing very quickly.
Versus domestically?
Versus domestically, which is usually, 5 years ago, it was 75% domestic. Now it's 49% domestic. Domestic meaning regional VCs investing. So we have many of the international VCs looking at the region, not just for regional opportunity, but for true innovation, which is different. And you see that especially in the UAE. So in the UAE specifically, last year, 73% of the GDP was non-oil sector. So it's not that the region's trying to diversify.
Say that again. The reason I think about that, I remember 30 years ago, 40 years ago, I don't know, 30 years ago, like a National Geographic, and it just talked about how the Middle East was thinking about kind of a non-carbon-based economy. Like they knew things were going to change. Say that number again.
So 73% of UAE GDP last year was non-oil related. So when you think about what that means, it's not that the region's trying to diversify, it has diversified, or at least the UAE has, Saudi's following suit, and the next ones. And so it is really an innovation economy, a knowledge economy, moving towards new sectors rather than just we're stuck in oil. So that correlated with how much international funding is coming in really puts us in a position where all sectors are innovative right now, we are leapfrogging in some innovations where we haven't had legacy incumbents really, take over those sectors in the past.
So what are the exciting areas in the economy that you're seeing right now?
So right now, the two most exciting areas that we are focused on are supply chain. So anything that's supply chain technology focused, really reinventing supply chain. So even if you think through manufacturing, so where we've historically manufactured things around the world and then shipped them, can you manufacture regionally? So we don't have incumbents in manufacturing. We've never had a large manufacturing industry. It's such a small percentage of GDP.
Right.
But if you were to take the world's best technology today, what does that look like? It's additive manufacturing, it's 3D printing. So we have companies in the region like Immensa, which are generally just building the best-in-class technology globally, building the rule books globally to do spare part manufacturing using 3D printing for oil and gas and other industries. And so you start thinking that's
what's going on in 3D, right? Haven't we talked about 3D printing so many times, the iterations, the cycles?
Yeah, there was the whole consumer push. I was at CES one year where there was this whole section of here are the plastic injected 3D printers that can make whatever you design, and everyone's going to have one of these, and they're going to be able to repair their own stuff. Fast forward a decade, we're not there.
What's the reality?
But we are. So I mean, even if you take a look at some makeup companies, the brushes that you can use for blush, those are for the largest company.
He uses blush
for your blush. Sorry, for your blush. All of our blush.
We all go into the makeup room.
So we all look alike. But ultimately, those are largely 3D printed. So you can take a look at. You don't know that it's 3D printed, but a lot of those have been 3D printed. Now, when you take a look at more industrial applications. So, for example, the oil and gas industry has $90 billion sitting in spare parts, right? So these are made using raw materials, shipped across the world, and then stored in a warehouse, draining working capital just in case they're needed. 20 to 30% of each of that warehouse gets thrown away each year for HSE reasons.
So now you can do kind of just in time.
So just in time manufacturing, not just in time inventory. So you've completely shifted that. You said, okay,
is it cost effective?
It's very cost effective. It's cheaper, especially because you're not shipping it halfway across the world. It's more sustainable, right? You're using new materials. So the reason it's really come forward in the last 10 years is the material science has now allowed you to really use materials that are strong alloys, not just natural ones. So as you think through supply chains, it starts with manufacturing. Where are you making stuff? And then how are you shipping it, and how does your last mile logistics look like? Can you use drones to deliver in parts of the world? So Global South generally doesn't have as much infrastructure in terms of road infrastructure. So why would you ever use diesel trucks that are 20 years old on rickety roads in large economies, large markets, large geographies, right? When you could use drones to do B2B deliveries. So you think about how do you leapfrog supply chains? How do you get to a world where 5 years from now, it's unrecognizable 5 years ago? And that's where we're investing. That's where we're seeing that. And then the other sector is really food security. So the whole world has had a push towards food security. The MENA region or the GCC both still import 85% of the food. So if you think about how do we produce food, how do we move towards not just vertical farming as we've known it, but better versions of it? So we look at companies that, for example, reduce energy consumption for vertical farming or indoor farming by up to 90% because of the way they treat water, because of the material science to proof these farms. And now they're exporting this technology everywhere in the world. 15 different countries in the US are using this technology to reduce energy consumption for indoor farming so that you can have more sustainable food production. So when you think about food security, when you think about supply chain, our part of the world in MENA and in GCC is still nascent in that we don't have the legacy incumbents and that industry sorted that you're trying to improve it, you're just trying to invent it. And so with that comes a lot of this innovation, the really quick adoption that allows you to leapfrog and create these new markets.
So you don't have the legacy overhang to some extent.
There's a legacy overhang.
I'm just curious what the fund looks like right now, given that there are all these opportunities out there, but at the same time, what we've heard over the last few years is that with rates higher across the world, it's been tougher to raise money. You have $400 million that you manage. How much of that is deployed right now versus how much you have on the sidelines?
So we're deploying out of our third fund, which is a $200 million fund. And we're about a third way into deployment out of that fund. Funds 1 and 2 are fully deployed. We're exiting them. We just had an exit 2 weeks ago. That's about 28 times money on our post-seed position, 8 times on our A position. So we're seeing a lot of innovation in the region start to materialize. It's our 6th exit. For a young firm to have that many exits behind us is a really good sign of the region's ability to materialize those.
Who are the LPs? Where are you getting the money?
So it's half regional, half international. So we can't name them, but it's a lot of international LPs that are looking at the region. A lot of them, it's their first time investing in the region, family offices and institutions.
Any sovereign wealth funds?
Internationally or regionally?
Internationally.
Internationally, one pension fund and large financial institutions.
And regionally?
Regionally, both, yeah. So we were Mubadala's first fund in the region 6 years ago. Until then, they had invested mainly internationally. We were ADQ, now Lenade's first fund in the region. So we work with all the regional sovereigns in smaller capacities. They are looking at the region to say, where can we enable growth? Because for them, it's not just capital, it's also economic growth.
They can put their money back into their own economy.
Yeah, similar to the pension funds and the endowments in the US, how they enable the venture ecosystem. In Europe, they enable the venture ecosystem, and then they're able to enable economic growth along with financial returns.
What would surprise people about what's going on in the Middle East and Africa right now?
I think it's interesting to witness in some parts of the Middle East, so in the UAE, for example, we have a lot of second and third time international founders have come in the last 3 years and building new companies there. So they had their first exit in the US maybe or in Europe, and then as they get to their second and third ideas, and they want to really address the global south, because that's the fastest economic growth over the next 10 to 20 years, is more the global south than the US and Europe. We have the world's youngest population. We're 60% under age 30. And so as you have this population starting to grow and build, this is across the Middle East and Africa, and Southeast Asia is also very young. So as you start have these populations growing, the economic growth that is ahead of us is tremendous. And so being able to capitalize on that, you have many second and third time founders that are moving back specifically to the UAE or moving to the UAE, they may not be from the region, and building new companies.
Noor, what assist is the governments that you, over in the Middle East, providing to support those founders? Whether it's as an incubator or something to kind of keep building this and attract them back. Yeah.
So there are several incubators, accelerators, and there's Hub 71 in Abu Dhabi, which was Mubadala funded and founded. There's Area 2071 in the UAE, in Dubai, which is from the Dubai Future Foundation. But I think the government's forward thinkingness is the most important thing. So you were talking about AI earlier. We've had a Ministry of AI since 2017. So when this all happened, it was great, wonderful. How do we incorporate? How do we move forward? How do we enable? Now, Abu Dhabi MGX, which was launched in March earlier this year, is a $100 billion AI fund for the UAE to build cutting-edge AI. So the government is an enabler, not just in incubators, accelerators, and funding, but also a thought partner. And that let's have that Ministry of AI. Let's work with the private sector to figure out which regulation we can enable that suits everyone's purposes.
When we come back, I want to kind of start where Tim started about this BlackRock getting commercial licensed out right now, Abu Dhabi. I mean, I'm curious as whether it's American global asset managers or European, how that helps or hurts. Is it competitive? Kind of get into that aspect and kind of what it means maybe for your business going forward. We're going to come back with Noor Suede. She's founder and managing partner at the UAE-based international VC firm Global Ventures. I'm still recovering. I've been sick for a while. We're going to continue our conversation. Noor joining us right here in our Bloomberg Interactive Broker Studio. You're listening and watching Bloomberg Business Week on this Monday. Carol Massar, Tim Stanovic. This is Bloomberg.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower today, the S&P, NASDAQ, both advanced. S&P had a 23-point gain, finishing the Monday session at 58.93, up 0.4%. The Dow was down 55, lower by 0.1%, while NASDAQ was up 111, a gain of 0.6%. The 10-year 4.41%, the 2-year 4.28%. Gold up 1.9%, 26.11 the ounce, while West Texas Intermediate crude at 69.20 a barrel, up by 3.3%. Bitcoin now higher by 2.9%, 91,757 on Bitcoin. So turned out to be a day in which we saw the Dow lower, the S&P, NASDAQ both higher. Jeff McLean is the CEO at Solidarity Wealth, and right here on Bloomberg Business Week, he was asked what's on the minds of his clients.
Yeah, I think a lot of it is election related. I mean, what does the next 4 years look like? And the excitement or nervousness, depending on the political backgrounds of where they're looking at the markets. From our perspective, I mean, I think in either case, you were going to have some consistency of the current administration continuing on, or Trump. We've kind of seen the show before.
Jeff McLean, CEO of Solidarity Wealth. Some of the other stories we're following for you. Sources tell Bloomberg members of President-elect Donald Trump's transition team have told advisors they plan to make a federal framework for self-driving vehicles one of the Transportation Department's priorities. Tesla shares up today by 5.6%. Rivian up by just about 0.1%. The Metropolitan Transportation Authority has approved a revised congestion pricing plan for Manhattan that President-elect Donald Trump has threatened to terminate once he takes office. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, let's get back to Nora Swade. She's founder and managing partner at the UAE-based international VC firm Global Ventures, still with us here in studio. I want to go through, we've been playing around on your website, and as you said, there's a lot of different sectors that you are involved in and investing in. Agri-tech, food tech, we've touched on some of this, supply chains. Walk us through some of maybe your newest investments in some of the different areas. You play in fintech, digital health, mobility, future of work. All of these are fascinating.
Well, they're all industries that are ripe for disruption. We started investing in 2018, and back then our heavy focus was fintech. And it was the argument of the region was still 85% unbanked. And you were never going to have...
Really?
Yeah.
In the region?
In the region.
Wow.
So with pockets of difference, like maybe Dubai or the UAE was a bit different, but the broader 400 million people living across MENA were 85%.
Where was that concentrated, though? Was that in, where geographically was that concentrated?
That's across Saudi Arabia, Egypt, Algeria, Jordan. So just generally.
So not everybody's rich royalty, right?
No, that would be very...
No, but I think there's an assumption. I know, that's a stupid question, but I just think there's an assumption that the wealth permeates everywhere.
So I think it's interesting. If you think Europe, right? You have Sweden, and then you have Greece, and that spread of GDP goes from $30,000 to $90,000 across, and the region's similar, but even more extreme. So if you think of Syria, if you think of Lebanon, you're in the few $1,000s a year GDP per capita, and then if you think about Qatar, you're in the $90,000. And if you think about the population disbursement between those, it's not equal, right? So you actually have 100 million people in Egypt. You have 40 million, not even 40 million in Saudi Arabia, right? You have less than 10 million in the UAE. So you hear about the ones that are exciting and innovation and leading the way and the largest sovereign wealth funds in the world, right? But a lot of people don't live within that realm. So when we talk about unbanked at 85%, you're not talking about a small pocket. You're talking about a lot of rural Saudi, most of Egypt, most of Jordan. And so when we brought fintech into the ecosystem alongside the regulators and the governments in 2018, that number shrunk by about 15% over 5 years, because suddenly people went straight to fintech, right? So no one built banks.
Yeah.
So you're not going to serve these people. And similarly, Kenya was
Africa, right?
Exactly. So it's a similar thing. So and then healthcare is the same way. So in healthcare, we have 1 doctor per 1,000 people. In the US, you're about 4 doctors per 1,000 people. So if you come to the conclusion of you'll never have enough doctors, you'll never have enough hospital. So how do you use health tech to give primary access to care? How do you use mobile phones? We have the highest digital penetration in the world for mobile phones and social media usage. So how do you use those to enable people to have access to healthcare? And then you take that same thinking and philosophy of how to use technology to leapfrog and provide basic access, not just to fintech and health tech, but also to food, to education. We have the highest percentage of population in school age in the world. So we're at 34% of our population is school age. In Europe, that's about 12%. So again, how do you provide education? And it's going to be technology enabled.
Where do those students go when they're done being students?
So
do they stay in the region?
A lot of them stay in the region. Well, many of them don't have second passports, so they're not going to be able to leave the region. So when you think about it, that's why you have such an emphasis right now on entrepreneurship. So our youth unemployment is one of the highest in the world because...
What is it? Help me out here.
It ranges from 25 to 35% depending on who you ask.
Yeah.
And the country.
And that's been a concern of the governments there.
Yes. So I think that's part of how do you have these people create jobs, participate in the SME sector. So the SME sector is 90% of the GDP in the region. So and become productive members of society.
Small medium enterprise.
Yeah, small medium enterprise. So that is the focus, and that hence the entrepreneurship push and the innovation push. And over the last 5 years, we've seen really a move from emulation. So Uber for the region, Careem, which then was acquired by Uber, to all the way to innovation, which is how do you solve for supply chains, which we talked about earlier. How do you solve for food security and agri-tech and really innovate with the IP, with the research, and with the ability to scale those companies globally. So in our portfolio of 61 companies, 12 now have more revenues in Europe and the US than in the region. And when we invested, they were just in the region. And you think about that, and you say that's because that's real innovation. You're thinking outside the box, or you're thinking there is no box, there are no legacy incumbents to compete with. So how do we solve?
You know, I said and teased that we were going to ask about what does it mean when a BlackRock moves more aggressively into the region? What does it mean when these global, whether it's US-based, European-based, what have you, move in, to increase ties, financial ties in the region? They see opportunity. Good for you, bad for you. What does it mean?
Great. For us, it's really a move into the region, moving capital, finding opportunity, helping
more money
scale.
around, right?
So venture in the region is $2.6 billion last year, our entire venture ecosystem.
That's it?
That's it. The world, for context, was at $285 billion.
Right.
But we're very pleased because 6 years ago, when I started the firm, we were at $400 million. So to move from $400 million to $2.6 billion is significant. It's still a drop in the bucket. It's like doing venture in the Bay Area in the 70s. Right, when founders still need a lot of handholding, there was real innovation, there was a lot of government support, and you're trying to move this ecosystem forward, and it's still small.
Yeah.
That's where we are. So it's really only upside from here, and I think a lot of the international players are starting to see that, move to the region, see the economic growth coming in the global south, and really want to be positioned there to leverage it.
So if you think back to 2017, and the dominant theme was fintech.
Yes.
What's the dominant theme 2024?
Food security, so either ag tech, supply chain, and then this underlying permeating AI that goes across all sectors.
Do you have to go to San Francisco, to Silicon Valley to see what's going on when it comes to AI?
No, I think where we sit in between East meets West. So we get to see what's happening in Silicon Valley, we get to see what's happening in Asia and China, and we get to witness both.
What's happening in Asia and China that we need to understand?
So I think that there is AI advancement there. They're doing their own thing. When you think back just to e-commerce, right, and how Alibaba and Alipay, and even the concept of the super app, which picked up in Asia, very different to how all of that transpired in the U.S.
Yeah, we have no super app here.
There is no super app. In Asia, you have many super apps. In the region, we have...
Although Elon wanted to, right?
Yeah, good luck.
Careem is now, which started as an Uber for the region, and Careem is now a super app, right? So Uber acquired the ride-hailing side, and then the rest, as a super app, got built to do from payment systems to food delivery to everything you can imagine under the sun. Healthcare. So you start to think about super apps do exist. It's just a different way of using technology to solve problems.
30 seconds left here. How do you think about AI? Like, there's so many conversations. What's the narrative that you actually invest on right now? And again, 30 seconds.
AI is an enabler of real companies' growth and building solutions that solve for hundreds of millions of people. So how can AI be leveraged to personalize education for everybody that doesn't have access would be a great one. So it's really the use cases of AI to create solutions that affect lots of people.
Really good stuff. Thank you so much. Glad you could stop by. You travel a lot, and I know you're far from home, but it was really great to have you in studio.
Pleasure to be here. Thank you.
Great to have you. Noor Swade, she's founder and managing partner, as we said, at the UAE-based international VC firm Global Ventures. We already know, I think we're going to put this in our weekend broadcast. So if you missed any, you can catch it on the weekend and our podcast.
Yeah, and our podcast feed as well. Hey, the S&P 500 closed in the green today, up 0.4%. The NASDAQ up 0.6%. The Dow fell by about 0.1%. You are listening to and watching Bloomberg Business Week.
This is Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio and Television.
Surprise!
Surprise!
It's Carol Masser.
I'm looking at, he's Tim Stenevec. And
wait, did I say that's Carol Masser? Or I'm Carol Masser? I hope I didn't say I'm Carol Masser.
You do it, Tim?
Hey.
You're not Carol Masser.
I'm not.
I'm
and
not
she's
Tim
back,
Stenevec.
which is awesome.
It's good to be back. I really missed you guys. I mean, I was doing a lot of reading and there's a lot of news going on, but I'm tired of being sick, so I am so happy to be back.
Check out what I put in the chat. It's a Wall Street Journal story. It's among the most read on the Bloomberg terminal.
This was the story I was trying to think of earlier and I couldn't, it just didn't come to my head.
Well, great minds think alike.
So go, you start.
Well, my mom always says,
I think about this too. Whenever
in
I
another
go
life,
to one,
I'm going to be a dermatologist.
Totally.
4-day work weeks, double the salary of some colleagues, no emails at night.
Yeah.
If those perks sound like they belong to a few vaunted tech jobs, think again. Dermatologists boast some of medicine's most enviable work lives. More aspiring doctors are vying for residency spots in the specialty.
This is a story from the Wall Street Journal. And what's interesting is increasingly, I know here in New York, the Madison Avenue, Park Avenue doctors, dermatologists, a lot of them don't even take your insurance. So it's bam, you pay for it, and they are busy as can be. There's a dermatologist from Ocean Springs Mississippi, I think it is, or Missouri, is it? Mississippi? I don't know.
I don't know. I'm looking at how much they make, which is a lot.
She finished her residency in 2018, now splits her time between clinical work with patients and her social media feed with a dermfluencer.
Okay.
It's a thing.
Yep.
Has 3 million followers on TikTok and Instagram.
And the median
I love my dermatologist, by the way.
The median earnings for a derm in the U.S., $541,000 a year. That's a median. That's according to the Medical Group Management Association. It's a trade group. They surveyed 150,000 U.S. physicians. Pediatricians earn a median of $258,000 each year.
I've got two doctors in the family, and they'll say, you think we're all rich. Nope, it depends on what you actually, what your specialty is.
I mean, think about it, too. The whole medical aesthetics industry, right? Is that what it's called, medical aesthetics?
I don't know if you've noticed, but we're in this medium with how we look really matters.
So that is something that insurance doesn't necessarily cover.
Comes in.
And when insurance doesn't cover it, you make a lot more money.
Yeah.
It's nice not to have those on-call hours on the weekends, right? When you're expecting an emergency.
Yeah, you don't get those calls in the middle of the night. Oh my God, I've got a wrinkle. Well, maybe you do. Depends on your clientele.
I bet some of those in New York City do.
Yeah, I've been in those offices where you do. Medical residency applications for dermatology slots are up 50% over the past 5 years, according to data from the Association of American Medical Colleges. With women flooding the zone, a younger generation of physicians wants better work-life balance than their predecessors, and unlike pressure cooker medical specialties such as cardiac surgery, dermatology fits the bill. Again, I'm reading from this really great story from the Wall Street Journal.
My mom always said, like, the dermatologists, because it's so competitive, they were at the top of their class in medical school because they were getting the residencies. They were getting into the programs that allowed them to pursue a specialty. Yeah, it's so competitive because it's such a great lifestyle. I think that other fields could take a page from their book.
Why?
And try to figure out how to make those doctors less stressed out, because that would have a great impact, not just on those work-life balance for those doctors, but also on patient care.
Yeah, and I will tell, for the two doctors in our family, one an emergency room doctor, surgeon.
That's stress.
It's a lot of stress. Another one in neurology. Very different types of jobs. I think what's interesting, too, about this dermfluencer, it talks about some dermatologists, this Wall Street Journal story, have built commanding presence on Instagram and TikTok, earning as much as $30,000 for each sponsored post to promote various brand skin products. If you're a cardiologist, it's kind of hard to say, hey, check out this stent. It just doesn't kind of work that way. It's interesting. And I don't know, again, I always want to make sure there's full transparency in terms of dermatology and products and all that good stuff.
Okay, so that's one way one could go if they were going to medical school or thinking about the profession. I want to talk about a different story. I put it in the chat, Carol. It's about Bill Wong. Remember, he was from Archegos, Archegos, excuse me. We had a lot of...
Well, there's a lot of debate over how to say it.
Archegos is what we've settled on, I believe. His family office portfolio briefly made him worth more than $30 billion. He said he's just a millionaire now with around $55 million.
That's a big difference. He faces sentencing Wednesday in New York for fraud and market manipulation tied to Archegos. Again, the debate continues. Collapse that we saw back in 2021. But he had to estimate his current wealth in a Monday court filing. His lawyers are pushing back against prosecutors' request that he be forced to pay $10 billion to compensate his victims, on top of spending 21 years in prison. So,
wow. He was convicted back in July of misleading Wall Street banks into helping him infiltrate the value of Archegos' highly concentrated portfolio to as high as $36 billion before the bubble burst. Its counterparties lost some $10 billion. The scandal was a major factor in the later demise of Credit Suisse.
Hey, I just want to mention one more, Most Read, if I may. We're going to head out west tomorrow after our broadcast. We're going to be actually in San Francisco and broadcasting there from the Schwab Impact Conference. There's a story about Brookfield's B of A Tower. It's a downtown LA tower. It's owned by an affiliate of Brookfield Asset Management, was slashed 69%, the latest sign of troubles for offices in U.S. central business districts. I still kind of keep waiting